Take your time, Sarah. Sarah, can you hear me? Sarah ameenda chini ya maji. Now, where is Annette? Annette, can you hear me?
Yes, mwalimu.
Now talk to me, ma'am. What's the difference between reasonable assurance and limited assurance?
Okay, jana nilijoin class late, but I can try.
Yes,
Reasonable assurance is where reasonable assurance is whereby you reduce the engagement risk to the acceptable level.
Okay, I like that.
And then limited assurance. A limited assurance. This is where the resources are limited. I think.
I love that. Thank you for trying. Of course, we will confirm. We'll confirm that. Okay. So, Sarah, can you hear me? Aki Sarah alipotelea wapi?
Yes, mwalimu.
Talk to me, ma'am. What's the difference between reasonable assurance and limited assurance?
I think the difference is on the objective.
The difference is
that the objective of reasonable.
What do you mean?
Is on the objective. Such that the objective of reasonable assurance is to reduce the engagement risk to an acceptable low level.
Okay.
But for the limited assurance, it's to reduce the assurance engagement to a level that is acceptable.
Okay.
On a basis of negative form of expression.
Let me confirm, you guys, you have tried your level best. Remember, we did this only yesterday and you are able to just explain what you have done. You are doing a good job. Now, remember, I was told by my mwalimu that if you want your people to remember something in an organization, meaning if you are a manager, you are a director in a given organization, you are supposed to make sure that you repeat whatever you want them to understand 8 times. Now that tells us something. Even us here, as we do this, we need to repeat what you have just done again and again for us to be able to remember. And I appreciate the effort that you are making and what you are able to remember. That being the first class that we had yesterday. You guys, you need to keep it up. Now, for better understanding, I want just to do a recap. That's why it's very important. Every time before we go to the next area, at least we do a very quick recap for us to be able to remember what we learned. Then again, as we continue, as we move forward, I want to urge you, at least you try your level best, at least be there at the right time so that at least we work together. Remember, we have got only 3 months to do this, and I just want not only to make you pass, but I also want to put a spirit of understanding in you. I want to make sure that we get the best auditors under the sun from this college. So at least, other than just making you pass, because now passing that I can guarantee you, we must pass because we have 40 steps. This is the best class that I've ever come before, I've met before, and I know you guys, you can just make it. If others have done so, you can also do the same. So it's very important for us to do a quick recap. I'll do this just to help you remember and also try to follow what you wrote yesterday so that at least you can understand. So we say assurance engagement. This is the process of examination of books of account. Examination of books of account with intention of trying to decrease the degree of confidence of the intended users. Meaning, when you are examining these books of account, stroke financial statement, meaning is the process of examination of subject matter with intention of trying to confirm whether this subject matter conforms to a set criteria in order to increase the degree of confidence of the intended users of the subject matter by giving reasonable assurance, and limited assurance. I like how you approach it. Someone said the differences between the objective, which is absolutely right. Now, this is what we see. Reasonable assurance is a positive form of assurance or a high-level form of assurance that an auditor can give after he has audited historical financial information. Then limited assurance, this is a negative form of assurance or a low-level form of assurance that an auditor can give after he has audited a prospective financial information. Already, we can see some differences there. Meaning, the first difference that we can see, reasonable assurance is a positive form of assurance, while limited assurance is a negative form of assurance. Reasonable assurance is high level form of assurance. Limited assurance is a low level form of assurance. We give reasonable assurance after we have audited historical financial information. Another difference, we give a reasonable assurance after we have audited historical financial information, and we give a limited form of assurance after we have audited prospective financial information. Then I remember I told you yesterday that historical financial information, this refers to any information that is available in the public domain, meaning it relates to any activity that has already taken place. If you're auditing financial year 2022-2023, this is now what currently is being audited. Meaning if you're auditing that means you're auditing information of activities that already has taken place. Meaning if it's a sale, they have already done those sales, and you can confirm. If you take January JV, Feb JV, March JV, all through up to December, if their financial year ends 31st December, then you'll be able to see the total sales that they had during that financial period. Meaning what you would have just done, you're working on information that is available in the public domain. Now, and PFI, this relates to information of activities that has not taken place. Meaning you're dealing with the information that is based on assumptions of activities that has not taken place but will take place in the near future. Now, let me give you an example. Assuming you are auditing a forecast. Assuming you are auditing a forecast, only if I'm coming to you, prepare yourself. Assuming you are auditing maybe a projection, or maybe somebody is auditing a budget. Olivia, what's the difference between a forecast and a projection? Where is Olivia? What's the difference between a forecast and a projection? Yes, give it a try.
They are more or less the same. A forecast is something that will happen maybe in unforeseen future. Projection is intended to happen maybe 5 to 10 years.
You're absolutely right. Let me show you. Now, let's do this. When we talk of forecast, this is a best estimate assumption. Best estimate assumption, meaning this is for short-term period, e.g., 1 year. A projection, this is hypothetical assumption, meaning you are dealing with a long period of time, e.g., 5 years. Meaning the difference between a forecast is the period of speculation is short, meaning it's a short-term assumption. Projection is a long-term assumption of activities that have not taken place but will take place in near future. Meaning, in our topic 6, we'll be discussing factors to consider before accepting an engagement of PF5. And we'll appreciate one of the issues to consider is that period of speculation. If the period is long, then chances of material missettlement are likely to be very high. If the period is short, meaning it's a best estimate assumption, then it means that just summative misstatement are a bit minimal. But one thing we need to agree, as long as it's a forecast, it's a projection, or it's a budget, then we are supposed to give a limited form of assurance. We are supposed to give a limited form of assurance. That's a very important point, worth noting. If you have noted somewhere, important, that's good. If you have not done so, then you need to do something. Wekesa, welcome. Happy and excited to see you. Meaning, when you're working on a forecast, this is replacement assumption. Yes. Now, who is talking? Is it Wekesa or somebody else? Wekesa, I'm a mute. So, either you're working on a forecast, a projection, or a budget, then you are supposed to give a limited form of assurance. So that was just by the way. So this is what we discussed yesterday. Then from there, we say, meaning by now, before I continue, okay, so what's the difference between a reasonable assurance and limited assurance? I hope now we are good to go. We have said one is positive, the other one is negative, the other one is a high level, the other one is a low level form of assurance. You give reasonable after you've audited an HF1, you give a limited after you have audited a PF1. Then number two, I also remember we did discuss elements of assurance engagement. Now I want to talk to somebody. Let me talk to who? Wekesa. Talk to me, Mom. Wekesa, how are you? Wekesa, can you hear me? It seems Wekesa can't hear me for now. Now, elements of assurance engagement. Elements of assurance engagement. Can you remember to move very fast? Because this is what we did yesterday. We are trying to do a quick recap before we usher our today's engagement. Now, I want to talk to who? Yes, Annette. We said we have 15 elements of assurance engagement. Am I right?
No, Malim, you say me, I wrote almost 4 elements of assurance.
You also
I have 3 party.
We wrote 5. We wrote 5. We wrote 5. And we came up with an acronym. Am I right, Olivia? We wrote 5.
I have.
Yes, we wrote 5. The crest.
Okay, the crest, yes. Exactly, crest. Whereby we said it's what? Criteria. Then we said we have what? Report. We said we have evidence, and of course we have subject matter. Then finally we said we have 3-party relationship. Now confirm, Annette. Which one did you not write yesterday? We did 5. Criteria, report, evidence, subject matter, and 3-party relationship. Then we said under 3-party relationship we have 4. We have the responsible party, party. We said we have the practitioner. We said we have the intended user. The intended user. Now I want to talk to who? Wekesa, can you hear me? Wekesa, kindly confirm. You can type there if you can hear me, Wekesa. I really want to confirm whether you can hear me. I really like having a very interactive class for the purpose of understanding. Now, I want to talk to who? Sarah, what's the difference between a responsible party and a practitioner? Sarah, you are missing in action. Where is Sarah? Now, to save time, we say responsible party. This refers to the management. Then we say a practitioner. This is the professional. That is the auditor. Then we say intended user. This refers to any person who has interest on the audited financial statement, Now, we say criteria. This refers to the benchmark. The benchmark that we expect the financial statement should conform to them. We said example, we can have IFRS as a criteria. We can have IAS as a criteria. We can have concepts as a criteria. We can have ISAs as criteria, etc. Meaning criteria, this refers to standards that we expect the financial statement should conform to them. Now, we see the report, we said this is the ultimate product that an auditor should come up with after he has gathered sufficient appropriate evidence. We said evidence, this is the outcome information that we get after we have evaluated the subject matter. Then we say subject matter, this refers to the phenomenon or the item that is being audited. Whereby we say we can have internal control system as part of our subject matter. We said we can have the financial statement, stock books of account as part of our subject matter. We can have the processes of the organization as part of our subject matter. Then from there, of course, we said we have the three-party relationship. So by now, at least we know the definition. We say is assurance engagement. It is the process of examination of the subject matter with the intention of trying to confirm whether the subject matter conforms to a certain criteria in order to increase the degree of confidence of the intended users of the subject matter by giving either reasonable assurance or limited assurance. Then there is something else very important that we mentioned yesterday. We say the reason why we give reasonable assurance and limited assurance is for us to be able to reduce our engagement risk. Whereby we say engagement risk, this refers to engagement risk, this refers to the susceptibility or the possibility that the auditor is like to express inappropriate opinion that the financial statement or the subject matter are referred to, and in a natural sense, that is not the case. Then we say we have some reasons why auditors do not give absolute assurance, whereby we said absolute assurance, this refers to 100% form of assurance. Absolute assurance. We said absolute assurance, this is 100% form of assurance, but we agreed we don't give 100% form of assurance. Where is Olivia? Give us like 15 reasons why we don't give absolute assurance. Where is Olivia? Olivia, can you hear me? Okay, for us to save time, allow me to work on this. We say as auditors, we don't give absolute assurance because of number one, use of selective testing. Whereby we say use of selective testing is whereby an auditor does not audit everything 100%, but he picks few items and he generalizes that characteristic behavior of those items to be a representative of the total population, meaning out of the items that have been picked randomly, the auditor makes a decision based on that. And by that fact, because of that selective testing, we can give absolute form of assurance. Then number two, we say some of evidence that we get is persuasive in nature. Persuasive means we are trying to encourage someone to give the information that they have. Remember somebody, we always say that we have asymmetry of information, whereby you can only give information that you are comfortable giving. Some of the information you might withhold that information. And by that fact, we just persuade for us to get this information. For that reason, we can't give 100% form of assurance. Then number three, we said we have inherent limitations of internal control system. We said we have inherent limitations of ICS, which again bar us from giving an absolute assurance. We also say that we have our personal judgment. As a human being, we have that judgment that we have. Yes, my judgment, my perception might be different from your perception. And because of that, we can give 100% form of assurance. Then finally, we say some of the subject matter could be a bit technical. Some of the subject matter could be a bit technical. And by that fact, we can give 100% form of assurance. Then finally, I remember we discussed issues of acceptance and continuance, whereby we agreed that there are some factors that we need to consider before accepting an engagement, whereby we need to consider our level of independence. We need to consider issues of competence that we have. We need to consider any possibility of threat that is likely to affect our objectivity of independence. We have to consider issues related to the preconditions that will attach to whatever we are doing. So that's what we did yesterday, and I'm so excited to be able now to pick now from there. At least we do something different. So today we are supposed to pick from non-assurance engagement. Now, when you talk of non-assurance engagement, this refers to any other form of engagement. Non-assurance engagement, this refers to any other form of engagement that an auditor can perform other than assurance engagement. This refers to any other form of engagement that an auditor can perform other than assurance engagement. Now, let me give you an example. Assuming you are doing tax consultation. Assuming you are doing tax consultation is a good example of non-assurance engagement. Assuming you are doing tax consultation. Examples of non-assurance engagement, we can have tax consultation. You can do compilation of return. We can do due diligence review. We can do agreed upon procedures. We can also do a review. We can do, excuse me, agreed upon procedures. We can do compilation, return, tax consultation. We can also do management consultation. So basically, when you talk of non-assurance engagement, we see this refers to any engagement that is outside assurance engagement, any engagement that you are not expected to express any form of an opinion, meaning you just need to say things the way they are. Like now, when you talk of tax consultation here, this is whereby we are trying to advise people on how to avoid issues of tax. Not keyword here, avoid. We can teach people on how to avoid, not a verb, but how to avoid issues of tax. I can show you how you can manage yourself so that you don't pay much to the government, and this you manage yourself. Meaning when I'm advising you on the issues related to taxation, we are doing that assurance engagement. Now, comparison return here, this is whereby you as an auditor, you can help the management to prepare the financial statement. Meaning you can post each and every disclosures in the rightful class, either this is an income statement item, or maybe a balance sheet item, or probably a cash flow item, etc., etc. Now, due diligence review, due diligence this refers to the caution, the care that somebody need to take before they engage themselves into any contractual relationship. Meaning you can do a due diligence review, whereby you are trying to confirm when this organization I'm auditing, when they enter into a certain contract, they consider due diligence review. Now, let's say, for example, they did purchase of a piece of land, or probably, yes, they did purchase of land, or maybe they bought maybe a car. Now, before they bought this piece of land, or maybe this car, they should have done maybe land search to confirm who is the rightful owner of that piece of land. Now, after that, they should have engaged a surveyor to confirm the location of that land, the size of that land, and of course, confirm any possibility of any green card. Then from there, of course, they should have done what? A mutation, whereby they should have attended for board, and also from there, they make an arrangement to transfer that piece of land into their name. Meaning, when you are doing all these activities, you are trying to do a due diligence. You are doing these activities before you acquire that asset. In examination scenarios, of course, examiner will ask you what's the difference between financial statement audit and due diligence review. Meaning, due diligence, this activity takes place before They take place before. But now, when we talk of financial statement audit, that actually takes place after the financial statement. Then from there, we have agreed upon procedure. Agreed upon procedure, this is whereby agreed upon procedures. This is whereby the client and another third party, meaning this client and this third party, both of them, they will engage, they will engage a practitioner to work on the factual findings. Meaning, agreed upon procedures, this refers to a process whereby the client and another third party engages a practitioner to work on the factual findings. Meaning, when you are doing factual finding, this is whereby you are trying to confirm the agreement that was there before. Is it being adhered to or not? Then, of course, we have management consultation. Management consultation, this is whereby you are trying to help people to make a decision of management nature. Now, let's speak from there. Let's put something down. Let's put something down. So the subtopic, non-assurance engagement. Non-assurance engagement. And at that note, these are engagements that falls outside assurance engagement. These are engagements that fall outside assurance engagement. These are engagements that fall outside assurance engagement. E.g., number one, agreed upon procedures engagement. Agreed upon procedures engagement. Agreed upon procedures engagement. Number two, compilation engagement. Compilation engagement. Compilation engagement. Number three, review engagement. Review engagement. Review engagement. Due diligence review engagement. Due diligence review engagement. Due diligence review engagement. But next, review of prospective financial information. Review of prospective financial information. Review of prospective financial information. And the last item, compilation. No, already we have done that. Yes, compilation engagement. Let's start with number one. Agreed upon procedures. Agreed upon procedures. One, agreed upon procedures. And that note, the objective of agreed upon procedures, the objective of an agreed upon procedures engagement, the objective of agreed upon procedures engagement is for the onset to carry out procedures, is for the onset to carry out procedures, is for the onset to carry out procedures of an odd nature, of an odd nature, to which the onset and the entity, which the onset and the entity and any appropriate third party and any appropriate third parties have agreed to work and report on the factual findings. To work and report on the factual finding. E.g., account payables, e.g., account payables, account receivables, etc, etc. Full stop. And a new line. As the author simply provides a report, as the author simply provides a report, as the author simply provides a report of the factual findings, of agreed upon procedures, as the author simply provides a report of the factual findings of agreed upon procedures, no assurance is expressed. No assurance is expressed. Number 2, compilation engagement. Compilation engagement. Compilation engagement. And that note, a compilation engagement is one in which a compilation engagement is one in which a compilation engagement is one in which a public accountant receives information. A public accountant receives information is one in which a public accountant receives information from a client, and arranges it in form of financial statement, and arranges it in form of financial statements, and arranges it in form of financial statement. Number next, review engagement. Number C, review engagement. Review engagement. Review engagement, and that note, it is a review of an entity's financial information. It is a review of any entity's financial information. It is a review of the entity's financial information other than the one that is done by the entity, other than the one that is done by the entity as part of the statutory audit. As part of the statutory audit. Full stop. Subtopic, application of review engagement. Application of review engagement. Application of review engagement. Number 1, review of interim financial statement. View of interim financial statements. Review of interim financial statement. Number 2, due diligence review. Due diligence review. Next, review of historical financial information. Review of historical financial information. Review of historical financial information. Full stop. Another subtopic, distinction between a review engagement. Distinction between a review engagement and audit of financial statement. Distinction between a review engagement and audit of financial statement. Distinction between a review engagement and an audit of financial statement. Number 1, a review engagement provides limited assurance. A review engagement provides a limited assurance. A review engagement provides a limited assurance, while an audit provides reasonableness. While an audit provides reasonableness. While an audit provides reasonableness. Number 2, engagement risk in review engagement is higher. Engagement risk in review engagement is higher. Engagement risk in review engagement is higher than in an audit. Than in an audit. than in an audit. I repeat, engagement risk in a review engagement is higher than in an audit. Number 3, in a review engagement, the practitioner's opinion is expressed in a negative form. In a review engagement, the practitioner's opinion is expressed in a negative form. The practitioner's opinion is expressed in a negative form, while in an audit, the opinion is expressed in a positive form. The opinion is expressed in a positive form. I repeat, in a review engagement, the practitioner's opinion is expressed in a negative form, while in an audit, the opinion is expressed in a positive form. The last point, a review of financial information is voluntary. A review of financial information is voluntary. A review of financial information is voluntary, while an audit is statutory requirement. While an audit is statutory requirement. While an audit is statutory requirement. Full stop. 2 issues I want you to note, and by the way, that's the end of that part. That's the end of that part, and apparently it is also the end of that topic. We are done with that topic. Very important thing I want you to note, under non-assurance engagement, we have said, under non-assurance engagement, this is any form of engagement that does not require you to express any kind of an opinion. Assurance engagement, you're saying we have to express an opinion, but when it comes to non-assurance engagement, no opinion is expressed. No opinion is expressed. That is the end of that topic. That's the end of that topic. Without wasting time, I want to introduce the next topic. But before I do that, I just want to have a plan. We might not be able to go through the past paper today, but I want you to make an arrangement at least to have your past papers around with you, so that once we are done with any topic, we need to see previous questions that has been tested before that topic for us to be able to understand whether we are relevant. So that's the end of that topic. With your permission, I want to introduce a new topic. But before I introduce a new topic, I want to confirm anybody who asks a question. I want to confirm whether we have any questions so that I can work on that before we go to the next topic. So, any question? Annette, do you have any question? Olivia, can you hear me?
Now, I don't have.
Okay.
Yes, I can.
Yes.
Will you be sharing the past questions? Will you be sharing the past papers questions for under this topic?
Yes, the previous stated questions.
Yes.
Or the past papers.
You can share any so that we can go through.
For the past papers, we can, of course, we make an arrangement. At least we need to be downloading them. For the questions, of course, we will work here in class. Of course, I want us to have a walk. We want to have a walk whereby we try to answer these questions in class. Yes, of course, I'll be letting you to work on them. But of course, I want to answer some of the questions in class so that we can develop that confidence of answering questions. Yes, we'll work on that. And again, for the question papers, of course, you'll be downloading them. We'll make an arrangement on how you can get them. Now, our topic 2, our second topic, we have topic 2, that is a regulatory framework. This is our second topic. And again, I also need to share, the course outline with you. And possibly after the end of the class, maybe I'll be sharing that. If I'll not share that, of course, I'll be sharing that within the course of next week. We need to have that so that at least we can understand where we are. So I want to introduce a new topic under regulatory framework, a new topic under the regulatory framework. Now, this is very important topic, very high tested in this level and also in our next level, that is topic 6. So actually, I mean topic, section 6. It is highly tested, so we need to get it right from here. And again, at this point, I want to confirm something to you. Now we are done with the issues of assurance engagement. Now we are starting our audit assignment. So anything that you're going to discuss right from this point, of course, we'll be discussing issues related to audit assignment. Please know that we are done with, now this is our topic 2. No, actually topic 3. So under regulatory framework, we will be discussing the objective of an auditor, objective of an auditor. Then after objective of an auditor, of course, we'll be discussing issue related to the appointment of an auditor, appointment of an auditor. We also need to understand remuneration of an auditor, remuneration of an auditor, qualification of an auditor, qualification of an auditor. Then from there, of course, we'll discuss the rights of an auditor, then from there, of course, we'll discuss qualification stroke disqualification. Qualification of an auditor, rights of an auditor, of course, duties of an auditor, duties of an auditor. Then from there, of course, we will discuss obligations, obligations of an auditor. So I want to confirm something. I want to affirm something here. Now we are done with the issues of assurance engagement. Anything else that we are going to pick from this topic going onward will be discussing issues relating to auditing assignment. Now, during this assignment, of course, I'll be talking of an auditor, I want to note this. When I talk of an auditor here, I'm referring to an external auditor. Any other auditor, of course, will be giving that other auditor a name. We can talk of internal auditor, we can talk of forensic auditor, we can talk of government auditor, etc., etc. But every time in examination scenario, when you hear an auditor, just know that we are dealing with an external auditor, meaning moving forward, we want to see what is the objective of an auditor. How do we appoint this auditor in the office? How do we remunerate this auditor? What are the qualifications and disqualifications of an auditor? Is this person, does he have some duties? Does he have some rights? And what are some of the obligations? Key issue I want to note that we are working on an external auditor. And without wasting time, let's start with the objective of an auditor. The objective of an auditor. The objective of an auditor. And I don't know, today you are living a journey. I don't know whether the network is an issue, or maybe today is Sunday, we have a lot of activities going on. So, what is the objective of an auditor? And I want someone to follow keenly. When you talk about an objective of an auditor, the objective of an auditor is to express an opinion on whether the financial statements stock books of account reflects true and fair value. Listen, somebody. The objective of an auditor is to express an opinion that the books of account reflect true and fair value. Now, before you express this opinion, there are some duties, stroke, responsibilities, stroke, activities that an auditor should perform. Meaning, our main objective as an auditor is to express an opinion whether the books of account reflect true and fair value. Please, you might forget everything else that I've told you today, but please don't forget your objective. Anybody akikuuliza what is your objective as an auditor? Just to express an opinion on the status of the financial statement. Well, this financial statement, they reflect true and fair value. Please don't forget that. Now, before you express an opinion, it is your duty to confirm whether this company has kept proper books of account. Meaning it is your responsibility as an auditor, before you express this opinion, confirm whether this company have they kept proper books of account. Number two, it is your business. Please don't write, I'll give you notes. Again, number two, before you express this opinion, it's your duty to confirm. Have you received any information and explanation deemed necessary for the purpose of forming an opinion? Meaning, we have a duty to confirm when we were gathering this evidence, when we are confirming these books of account, there's some information that we are not clear, and we requested an explanation from the management. So it is our duty to confirm, did we receive any information and explanation deemed necessary for the purpose of forming an opinion? Number three, it is our business to confirm, what about the regulatory framework? Those rules and regulations within the organization, are they being adhered to or not? So it is our duty to confirm whether those policies, those regulations within the organization are being adhered to. If the answer is yes, then you can go ahead and express an opinion that the books are referred to and fair value. It is your business to confirm, what about this financial statement? Are this financial statement in agreement with the books of account, including receiving returns from the branches that you have not visited? Meaning it is your business, before expressing this opinion, to confirm whether the financial statements are they in agreement with the other books of account, including receiving returns from the branches that you not visit. Then from there, it's your duty to confirm whether these books of account do they reflect true and fair value. If the answer is yes, then you can go ahead and express an opinion in that matter. So let's have that down. Let's put that information down. Let's put that information down. Objective and general principles of audit. Objective subtopic, objective and general principles of audit. Subtopic, objective and general principles of audit. Objective and general principles of audit, and that not. And the principles of ISA 200 and the principles of ISA 200. The objective of an audit of financial statement. The objective of an audit of financial statement is to enable the auditor, to express an opinion, on whether the financial statements, are prepared in no material respect, whether the financial statements are prepared in no material respect, in accordance with applicable financial reporting framework in accordance with applicable financial reporting framework. I repeat, and follow on what we've written and the principles of ISA 200. The objective of an audit of financial statement is to enable the auditor to express an opinion on whether the financial statements are prepared in normative respect, in accordance with an applicable financial reporting framework, in accordance with an applicable financial reporting framework, in accordance with applicable financial reporting framework, full stop. And that note, these are contained in the Companies Act. These are contained in the Companies Act. These are contained in the Companies Act, section 162. Section 162. And in the 7th schedule, open bracket, in the 7th schedule, open bracket, content of an audit report. Content of an audit report. Content of an audit report, i.e., you can put in form of a subtopic, i.e., duties, stroke, responsibilities, with regard to financial statement. With regards to financial statement. Responsibilities, stroke, duties with regards to financial statement. Number 1, to write a report. To write a report. In order to express an opinion, on the financial statement. To write a report in order to express an opinion on the financial statement. Number 2, to state whether in the opinion, proper books of accounts have been kept. Proper books of accounts have been kept. To state whether in the opinion, proper books of accounts have been kept. Next, to state whether acceptable accounting policies, have been used consistently. To state whether acceptable accounting policies have been used consistently. Number 4, to state whether they have obtained all the information. State whether they have obtained all the information and explanations considered necessary informing an opinion. State whether they have obtained all information and explanations considered necessary informing an opinion. Next, number 5, to state whether the financial statements reflects true and fair view of the company's state of affairs. of the company's state of affairs. Full stop. Now, listen, somebody. We have said our main objective as auditors is to express an opinion on whether the books of account reflect true and fair view. Then we have agreed, before you express this opinion, there are some duties that you are supposed to perform. Please, I want someone to follow keenly. Now, those activities is now what we are referring to, duties or responsibilities or activities that you need to confirm before you express an opinion. Now, in our last topic, that is topic 8, we'll be giving different types of opinion. You can express a modified opinion, you can express modified opinion. When you are giving this modified opinion, you are giving either an emphasis of matter paragraph, you are giving a qualified opinion and accepted form due to either limitation scope or maybe due to disagreement, etc., etc. But before you give the kind of opinion that you want to give, there are some activities that you must perform. I think I need to do this. Now, we have seen our duties as an auditor, our main objective as auditor is to express an opinion. Now, when we express this opinion, you can give two forms of opinion, either unmodified or unqualified, or you can give modified, or you can give qualified. Now, either you are giving modified or unmodified, there are some activities that you need to perform. Now, for you to give either unmodified or modified, you are giving that based on information or activities that you have performed. Now, this is what you are saying. If I'm giving unmodified, I'm giving unmodified if I'm certain that I've confirmed all the matters under the 7th schedule, that is the duties of an auditor. It is possible that, yes, I want to give a modified opinion, but for me to give a modified opinion, I can give either an emphasis of matter paragraph, or I can give a qualified opinion either due to disagreement, or maybe due to limitation of scope. Now, I'm giving either limitation on scope, whereby I'm going to give an limitation, I'm giving either disclaimer, or I'm giving a qualified opinion and an accepted form. Under disagreement, I can give an false opinion, or I can give a qualified opinion and accept form. Meaning, there are different types of opinions that we can give. And please, don't worry about this. We'll be working on this in the right time. Don't worry. I just want to stress in a point here. Meaning, if I want to give either a modified opinion or modified opinion, there are those activities or the duties or responsibilities that I must perform to help me to give any kind of opinion that I want to give. Remember what we have said. We have agreed that our main objective as auditors is to express an opinion that the books of account reflect to and fair view. Now, these are different types of opinions that we can give, and we can give this after we have performed some activity. That's why we are saying it is our business as auditor number one to confirm whether this company, have they kept proper books of account. Number two, I have to perform an assignment to confirm the financial statement, are they in agreement with other books of account? And if there are some other branches that have not audited, have not visited, have I received returns from those branches there? Number three, is my business to confirm, after I've done my assignment, these books of account, do they reflect true and fair view or not? Is my business confirmed? Have I received all the information and explanation deemed necessary for the purpose of forming an opinion, etc., etc. Meaning, what we are saying, for us to express any kind of opinion, there are some duties that we need to perform. Now, somebody I want you to confirm, in those notes that I've given you, there isn't anywhere we have said it is our duty to prevent and detect errors and fraud. There isn't anywhere we have said it is our duty to advise the management. So in an examination scenario, if the examiner asks you duties of an auditor or the primary responsibilities of an auditor, please don't tell me to prevent and detect errors and fraud. Don't tell me to advise the management. Those are other incidental activities that you can perform. So it's very important for you to listen during examination. Confirm, is the examiner talking of other incidental activities, or is he talking of the primary responsibilities of an auditor? If he is talking of primary responsibilities, then you can just give what we have just listed there. Actually, we need to add that. Note number 6. Note 6, please note this. And the next note. And that note, note 6. Number 6. And a new line. An auditor can also provide other incidental activities. An auditor can also provide other incidental objectives. An auditor can also provide other incidental objectives, such as 1, to prevent and detect errors and fraud on a timely basis. To prevent and detect errors and fraud on a timely basis. To prevent and detect errors and fraud on a timely basis. Number 2, to advise the management, on the accounts and ICS. To advise the management on accounts and ICS. So in case examiner talks of other incidental activities, please you can give us 2 points. Roman 1, we have said to prevent, detect errors and fraud on timely basis. And number 2, we have said to advise the management on matters related to the internal control systems and those books of accounts. Subtopic, responsibilities of the management with regard to the financial statement. Responsibilities of the management with regards to financial statement. Responsibilities of the management with regards to financial statement. So what to see? What is the responsibility of the management? Number 1, to prepare and present financial statements. To prepare and present financial statement. To prepare and present financial statement in accordance with the identified financial reporting framework. To prepare and present financial statement in accordance with the identified financial reporting framework. Prepare and present financial statement in accordance with the identified financial reporting framework. Number 2, to design and to implement strong and effective systems. To design and implement strong and effective systems of control. To design and implement strong and effective systems of control that are relevant, to ensure that financial statement to design and implement financial statement. To design and implement strong and effective system of control. To design and implement strong and effective system of control that are relevant, to ensure that financial statement are not materially misstated. Design and implement a strong and effective system of controls that are relevant to ensure that financial statements are not materially misstated. But next, to maintain proper books of accounts. To maintain proper books of accounts. To maintain proper books of account. To maintain proper books of accounts. To maintain proper books of accounts. But next, to select appropriate accounting policies. To select appropriate accounting policies. To select appropriate accounting policies. But next, to make reasonable accounting estimates. To make reasonable accounting estimates. But next, to safeguard the company's assets. To safeguard the company's assets by ensuring proper records exist. By ensuring proper records exist. By ensuring proper records exists. But next, to prevent and detect fraud and errors. To prevent and detect fraud and errors. To prevent and detect fraud and errors. But next, to file the relevant return. To file the relevant returns to the appropriate authorities. To file relevant returns to the appropriate authorities. Next, to consider the appropriateness of going concern. To consider the appropriateness of going concern. To consider the appropriateness of going concern basis of accounting. To consider the appropriateness of going concern basis of accounting. Consider the appropriateness of going concern basis of accounting. Full stop. And that's the end of that first segment, whereby we are discussing objective of an auditor. Please, I want you to remember this. Objective of an auditor will always be tested. Same as duties, and that's why I'm overemphasizing on this. Please, if you have to forget anything else, please don't forget your objective as an auditor. And moving forward, of course, I'll be asking what is your objective and some of the duties that you need to perform before you express an opinion. Please don't confuse between primary responsibilities of an auditor and the other incidental activities that you can perform as an auditor. You can advise the management, you can prevent and detect errors and fraud, but that is not your primary responsibility as an auditor. Your primary responsibility as an auditor is to express an opinion with the books of account reflect to and fairly. That is your main objective. And for you to perform that objective, there are those 5 duties that you have said you need to confirm. Number 1, we have said we have a duty to come up with a report. Number 2, we have said we have a duty to receive information and explanation deemed necessary for the purpose of forming an opinion. Number 3, we have said we have a duty to confirm whether the policies of the organization has been adhered to consistently. We have said we have a business to ensure, not to ensure, but to confirm whether the books of accounts refer to and fair fee. Then finally, let's confirm, have we received all the information and explanation deemed necessary for the purpose of forming an opinion. If you can confirm those 5 items, you can go ahead and express an opinion. Now, I want to take you to the next level. Kind of subtopic, legal and professional framework. Subtopic, legal and professional framework. Legal and professional framework. Legal and professional framework. Legal and professional framework. That's our next subtopic. Legal and professional framework. That's our second topic. I don't know, Annette, now can you see the board clearly? Or it is still not clear? Annette, can you confirm for me? Are you able to see the board clearly, Annette?
Yes, Mwalim.
Thank you, thank you. Legal and professional framework. This is our second segment. Now, in this topic here, number one, we want to see, we'll be discussing issues of appointment of an auditor. Appointment of an auditor, we're going to see how we appoint an auditor. Appointment of an auditor. Number two, still this topic, we want to see remuneration of an auditor. Remuneration of an auditor. Number three, we'll be working on removal of an auditor. Removal of an auditor. Number four, we'll be discussing qualification for appointment as auditor. Qualification for appointment as an auditor. And of course, we'll be discussing 5 rights. Rights of an auditor. Rights of an auditor. Then after you've done that, I'll be introducing auditors' legal liabilities, but now that will come later. So this is what we'll be working under this subtopic. We want to see how our auditor is appointed. How do we remunerate an auditor? How do we remove an auditor from the office? Qualification or appointment of an auditor and rights of an auditor. Now that's what we need to work on. But I think it will be prudent for me to give you like 5 minutes break. And allow me to give you 5 minutes break. We'll be finishing our class around 7:45. I'll be finishing 7:45 because I'll be expecting to join another class by 8. So I'll give you a 5-minute break. Then from there, meaning I'll be resuming 7:29. It's already 7:24. So I'll be resuming 7:29. At least we try to discuss these few points. We put something down. Then from there, we call it a day. So I have at least 5 minutes break. So we have said the first auditors will be appointed by the directors to hold office from that date of appointment until the first AGM. Then we have seen during AGM, it is the business of the shareholders now to do what? To appoint the owner. Remember, shareholders are the owners of the company. Shareholders are the owners of the company, meaning it is now the responsibility of the shareholders during an AGM to appoint an auditor. Then from there, if the auditor has not been removed from the office or he has not resigned from the office, she is deemed to be reappointed. Then finally, in case the shareholders or directors do not appoint an auditor, that the registrar of companies can come in and appoint a person to act as an auditor. In case of casual vacancy created either because of incapacitation or maybe the death of that auditor, then the registrar of auditors can appoint an auditor. The directors can come in to appoint an auditor. The directors can come in to appoint an auditor, or maybe an extraordinary meeting can be constituted to appoint an auditor. Let's put that information down. Please note, subtopic, legal and professional framework. Legal and professional framework. Then from there, let's have the first subtopic, that is appointment of an auditor. Appointment of an auditor. Appointment of an auditor. Appointment of an auditor. And that note, appointment by the shareholders. Appointment by the shareholders. Appointment by the shareholders. Appointment by the shareholders. And that note, the shareholders must appoint an auditor. The shareholders must appoint an auditor. The shareholders must appoint an auditor in each and every AGM. In each and every AGM. In each and every AGM. To hold the office. To hold the office. To hold the office. From the conclusion of that AGM. From the conclusion of that AGM. To the conclusion of the next AGM. To the conclusion of the next AGM. I repeat, appointment by the shareholders, put an FN. The shareholders must appoint an auditor in each and every AGM to hold the office from the conclusion of that AGM to the conclusion of the next AGM. The conclusion of the next AGM. Number 2, automatic reappointment. Automatic reappointment. Automatic reappointment. Put an FN. If the shareholders don't appoint an auditor in that AGM, if the shareholders don't appoint an auditor in that AGM, auditor is deemed to be automatically reappointed. Auditor is deemed to be automatically reappointed. Auditor is deemed to be automatically reappointment. Auditor is deemed to be automatically reappointed. Full stop. I repeat, if the shareholders don't appoint an auditor in that AGM, auditor is deemed to be automatically reappointed. Number next, appointment by the directors. Appointment by the directors. Appointment by the directors. Appointment by the directors. i.e., you can have Roman 1, the first auditors of the company on incorporation. The first auditors of the company on incorporation. The first auditors of the company on incorporation. Number 2, to fill in casual vacancy. To fill in casual vacancy arising either out of death. Arising either out of death or incapacitation. To fill in a casual vacancy arising either out of death or incapacitation. Arising either out of death or incapacitation. Number next, appointment by the registrar of companies. Appointment by the registrar of companies. Appointment by the registrar of companies. And that note, the registrar of companies is empowered to appoint an auditor. The registrar of companies is empowered to appoint an auditor. The registrar of companies is empowered to appoint an auditor, where the shareholders and the directors, have failed to exercise their power, in appointing one, within the stipulated time. Within stipulated time. Full stop. Now let's go to number 2. We are done with the appointment of an auditor. Please note very simple terms. Number 1, note when a director appoints an auditor. We have said an auditor is appointed by directors during the first appointment, and number 2, in case of casual vacancy has been created. Then we have said the shareholders appoint the subsequent auditor during an AGM. Then if the auditor is not removed from the office or does not resign, he is deemed to be reappointed. Then we have said in case these two they don't appoint, then the registrar of companies can come in to do what? To appoint an auditor. Now let's go to number 2, remuneration of an auditor. Remuneration of an auditor. Now, this is what we say, very simple. An auditor is remunerated, or the auditor's remuneration is fixed by whoever appointed the auditor. I repeat, the auditor's remuneration is fixed by whoever appointed that auditor. Now, that's to imply if you were appointed by the directors, then it is the business of the director to what? To fix your remuneration. If you were appointed by the shareholders, then it is the business of the shareholders to fix your remuneration. If you were appointed by the registrar, then it is a business of the registrar and the director, because the registrar doesn't have an office. It is a business of the registrar and the director to fix your remuneration. Let's have that. Remuneration of an auditor. Remuneration of an auditor. And that note, this is contained in section 159. This is contained in section 159, which states that the auditor's remuneration shall be fixed. The auditor's remuneration shall be fixed by whoever appointed the auditor. The auditor's remuneration shall be fixed by whoever appointed the auditor. Next point. The section also defines remuneration to include. The section also defines remuneration to include any expenses of the auditor, paid by the company. The section also defines remuneration to include any expenses of the auditor paid by the company. Full stop. And we are done with remuneration of an auditor. Let's go to the next item. Removal of an auditor. 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 Now, ladies, I feel we can pick from removal of an auditor in our next class. I can see Annette is off and on. I can see also somebody else told me she had a network issue, she could not join. So I feel like we can stop there. Of course, we have like 10 minutes to go, but I feel we can just pick from there in our next class, so that at least network issues zitakuwa solved. Now, before then, I also feel like I will be working on how we can get these past papers. I want us to start revision as we do this. Yes, my network problems. Yes, Annette, I can understand this. So I want us to come up with framework so that the way we have done today, before we commence our today's engagement. At least we try to tackle some few questions that covers what we have done previously. So that's just to help us at least to start understanding how to work on this area. So for today, ladies, I request we stop there. Looking forward to meet you in our next class that is on, that should be on Saturday. But unless maybe I get another opportunity in between the week, I can also try to engage you and try to see what we can do. It's our business and our duty, at least, and we are so much committed to make sure that at least we get it right. So thank you for your time. Thank you for being there. I trust me, the class has been successful because Olivia and Janet have stayed put until the end of the class. Otherwise, if you guys were not there, it would not be a class because already everybody would have gone. So I have all the reason to salute you and say thank you for just staying put. And with that remarks, I want to wish you a lovely evening and also a nice weekend ahead of you. Thank you and have a wonderful night. Okay. It's okay, Olivia, noted, Olivia.